Hello guys, welcome back to yet another episode, and in today's video we are going to look into something we call the chart patterns. This is one of the main things that you need to know when it comes to Forex, and of course it gets to enable you to know which side the market is going. So let me just proceed and get started. So we are talking of Forex trading. So for this one, this is lesson number 9. So for those people who have been making follow, I hope you understand some things, but in case you're finding any hardship, just talk to me on the comment section. But before you get to move further, if you're new to this channel, just go ahead and make sure you hit the subscribe button, turn on the notification bell so that I don't miss these kind of videos each and every single time I have a new episode. And for those people who want to push this Forex thing to the next level, I'll just tell you this is the only way to go. You need to learn first. As we get to proceed further, as we get to around lesson 15, we'll get away from the theory part, we'll get into the chart so that you get to see exactly how you can get to do your analysis. So as I said, today we're going to do, it's called chart patterns. They're called chart patterns. And with this, we have around 5 major chart patterns that are very, very important for you to know, so that we get to move, we get to make sure they get to stick into our heads. And to start with, we are going to look into a chart pattern. This is one of my favorite. It's called double bottom. It's called double bottom. It's called double bottom. So with double bottom, as the word suggests, it normally forms at the bottom of every chart. So for instance, this is a scenario. For example, we have a downtrend. We have a downtrending market. So the market has been moving down for a while, and then it gets to form something that looks like a W. It's usually like a W pattern. So this one, the double bottom, we can also get to call it a W pattern, since in most cases it gets to form a W, something that looks like a W. So with the double bottom, whenever you get to see the market form something like this, so you get to anticipate the market is going to change the direction from the downtrend to the uptrend trend. So for this case, when it gets to form the W pattern, we have this part. This part we normally call it the neckline. So this part we normally call it the neckline. It's called the neckline. So with this trading strategy, there are people who are very, very aggressive, meaning once they get to see this double bottom just formed, they just get into the trade immediately from here. So they get to focus their stop loss right here. This is where we place our stop loss. These are our entry position, and then they get to place their take profit, that is their TP, above here. So it depends with the individuals, but if you have been trading this pattern long enough, you know when it's valid and when it's not valid. But I'll be showing you how you can get to know a valid double bottom, so that you also have you get to have the knowledge on how you can get to make it, or to understand how you can get to enter aggressively. So that's double bottom pattern. So there's something I want to show you with the double bottom before we head to there. So as I was saying, with the double bottom, when the market gets to form something like this is the first leg. It's usually considered to be the first leg, and then you expect it to just go above a little bit, then comes back to this point, then proceeds up. So there's something you need to really understand with this. So for this case, you just need to draw something like this. I normally draw a box like that, and what you get to wait for is to make sure you see that these are the wick of this second leg. This is the second leg. This is the second leg, and here we have the first leg. So this is the first leg. So for this case, for this wick, you just draw a rectangle like this. So for this case, if the second leg hasn't crossed this box with the body, these are valid double bottom. And when it gets to close below this the first leg with the body, this one we normally say it's an invalid double bottom, and it's not advisable you go to trade with that. So for this case, if I want to trade this double bottom, I have to make sure the second leg just touches this rectangle with the wick only, not the body closing below. So that's for the case of our double bottom. That's our first our first chart pattern, but I'll be showing you more about these patterns in the charts, since it's very important for you to get to see these charts on the market. So number 2, we have the double top. So the double top is the exact opposite of the double bottom, and for this case we normally consider this one to be an M pattern. What I mean by that is that we have the first leg, and of course we have the second leg. The market could be moving up, then it gets to touch, as I explained with the double bottom, we get to draw an imaginary rectangle. You find the market, for instance, it gets to touch this rectangle, then gets to move down a little bit, then it could touch this box with a long wick, then it continues going downwards. So for this case, this is the double top. This is what we call the double top. And as I said with the double bottom, a valid one is the one that the second leg, this is the second leg. The second leg touches this imaginary rectangle here with the wick, and the body doesn't close above here. If it gets to close above here, that's not a valid double top. So it's important for you to really understand a valid double top and an invalid double top. So for this case, as I said, there are people who are very aggressive. Once they get to see this, they can just get direct into that trade, and this could be their entry position, entry point. They place their stop loss here, then they target their take profit somewhere down there, most likely a reasonable risk to reward ratio, which is going to really pay off. So for that case, there are people who are conservative. You find themselves waiting for the market to break the neckline, then retest, then they look for selling opportunities. And remember, right here, there are factors that we always look for when you're going for selling opportunities, one of which we could be looking for bearish engulfing candle. Could be looking for bearish engulfing candle. Number 2, we could also be looking for another double top right there. Double top before we go down. The other thing we could be looking for is a shooting star. And then the fourth one, what we could be looking for is the evening star. So hopefully these are things that you're understanding as I get to list them here. If you're having some difficulties understanding this, you can watch my previous lessons, since these are things I've already explained prior. So let's proceed. We get to move to the next chart, that is the chart pattern. And for this case, we'll be looking into something called head and shoulder. These are that we have head and shoulder pattern. So these are mostly, they are considered to be reversal chart patterns, meaning they get to form when the market is about to change the direction. So for this case, the head and shoulder, as the word suggests, it has shoulders, and of course it has the head. As naturally we have the head, we also have two shoulders. So that's the same case with this market. So it has a head, shoulder one. So here we have shoulder one, and then we have the head. Here we have the head, and of course we have shoulder two. So as the market suggests, the market was moving on an uptrend. Then it gets to form these two shoulders plus the head. Then it gets to proceed and unfold downwards. So for this case, we normally draw a neckline here. So as I said, there are people who are more conservative. If you're a beginner, I would suggest you be a bit more conservative until you get to master these things. So for this case, you'll wait for the market to retest this neckline. This is the neckline. So once it gets to retest this neckline here, you get to look for entry positions like this. So this is the entry position, entry point, stop loss somewhere here above the zone. Of course, make sure it's above the zone. Then from here, you just need to focus with the TP. Another secret, in order to know where the market might get to, you just need to measure this distance from here to here. The market in most cases gets to move that the same distance. So get to measure from here to here, from the head to the neckline, and extend that the same distance on the other side, and this could be your X. That is your X. So that's how you get to know where the market is going to go to, and it's very easy. This is something that you can get to do over and over till where you'll be very comfortable with this. So it's important for you to pay attention to this as I get to explain to you as we get to move further. So that's the head and shoulder. So let's look into the opposite of a head and shoulder. If the market is in a downtrend and it gets to form it's usually considered to be this number 4, the inverted head and shoulder. So for this case, it's the opposite of the other head and shoulder. So the market was moving in a downtrend. It gets to form shoulder 1. We have the head here, and of course we have shoulder 2. We have shoulder 2, we have shoulder 1, of course we have the head. So here we have the neckline. So as I was saying, for people who are a bit conservative, you just need to wait for it to retest the neckline, then you get to enter. Your entry position is here, and then our stop loss is here, then our take profit is somewhere there. So as I was saying, you just need to measure the distance from here, X like that. This is the same distance we're anticipating the market is going to move on the upper direction. So this X, we get to measure with this X. So this is the same distance we're anticipating the market is going to move on this other direction. So hopefully this is something that is coming along and you're getting to understand. So for today, we just looked into those 4 chart patterns, but there are more chart patterns. As we get to move further, I'll be introducing them to you. As you can see here, I have this is my favorite chart patterns, and these are things that I get to implement every day into the market. Hopefully this is something that you will take your time here to practice, but as you get to move forward, I'll be applying them into the market real time. So that's it for today, and of course hopefully you have already hit the subscribe button, turn on the notification bell, and of course I'll be looking forward to seeing you in our next episode. Peace guys.